All right. Hey, everyone. So, I want to talk a little bit about rotation because that's kind of what's going on here. And not even kind of, that is what's going on here. So, I'll just try to make this as concise as I can. But a lot of people think that hedge funds run Wall Street, right? And that's just not true. It's pension plans that run Wall Street. So if you're a pension plan, just I'm in Connecticut. So say I'm Mark, and that's my name, and I'm the head of the pension plan here in Connecticut. And I decide, all right, here's how I want to divide my portfolio. I want to have 10% in cash and I want to have 10% in equities. And that other 80% I'll put in something else, whatever. We're just talking about an example here. So I, as the pension manager, will go out and find people or firms that can manage the cash, meaning it's not literally cash, it's overnight agreements, short term lending, blah, 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 to try to get the best rate possible. If I will then talk to equity managers and say, hey, here is my, here's our money. We hire you to manage equities. That means you can't get too much cash in your account. We have someone else managing our cash. So you cannot get above 5% cash in this account. You have to stay in equities. If not, you're violating our contract. So what does that mean? Well, when a money manager thinks the market is going to go down and they have to stay in equities, they're going to move their money from what they perceive, notice I say perceive, but what they perceive to be more risky to something that's less risky. So while the technology sector has blasted off, and and as you know, if you've listened to my videos before or whatever, follow me. I think we're starting to get to panic buying range here. But as tech blasts off, where is this money coming from in the institutional world? Well, maybe it's coming out of consumer staples. So you look at that. It's almost like an inverse, you know? Tech goes up, consumer staples go down. Consumer staples go down, tech goes up. There's always opportunities to make some money somewhere in the market. Now, let me talk a little bit more about why I think we're kind of getting too close to a top here. And I'm not saying sell everything. I'm just saying have a plan for what's going to happen. Whether it's tightening up your stops, whether it's thinking about buying inverse ETFs, there's a whole lot of ways you can play a market downturn. And in a lot of ways, it's easier to make money in a down market than an up market because markets go down faster than they go up. So you just got to go for the ride. You know, don't, I've been doing this long enough that I don't question it anymore. It's like sometimes you see stuff in the market, it's like, what the hell is going on? But it's like the market is a collection of people, and people are irrational. The market is not math. The market is not chess. The market is more like a poker game. It's all emotions. For example, just think about this if you're someone who thinks about fundamentals. What happened since 9 o'clock this morning to 9:30 this morning to 4 o'clock that made this sector, which is worth trillions and trillions and trillions of dollars, increase by almost 1.5% in value? The answer is nothing. It's just people's perceptions. Now, anyway, this is one of the things I wanted to show you. So the S&P 500 is what we call a market weighted indice. All right. So there's 500 stocks in the indice and they're weighted by market cap. So the bigger the company, the more influence it has on the index. Apple, Nvidia, Microsoft together are about 20% of the S&P 500. So think about that. Three stocks are 20% of a 500 stock index. There's 497 other stocks. But this is skyrocketing. Remember, market cap weighted. Now, let's look at the S&P 500 that every stock in it has the same weight. This is an equally weighted index. So, in other words, NVIDIA, the biggest company in the market, has the same importance to this index as the smallest company, whatever the 400th smallest company is, or I mean, sorry, the 500 smallest company is in the S&P. So this is kind of showing us a divergence here. In a lot of ways, it's kind of like it could be a flight to safety. It was very similar back in the end of uh, 21. People are starting to think like, well, I'm going to kind of start selling my smaller companies and go into these bigger numbers or these bigger names. I mean, Tesla has really come back to life here. I mean, look at that. And this is really a good example here of how markets work, right? Why did Tesla run into resistance here? It wasn't a coincidence. It was resistance there because there was resistance back there. You get resistance at former resistance levels. And that's because markets are driven by emotions and psychology. A lot of people I talk to ask me things like, Mark, this great company, blah blah blah. It's got great earnings, blah blah blah. Why is the stock going down? Well, the market doesn't care about that stuff. Most trading is short term, day trading, uh, swing trading, high frequency trading. These strategies don't care about where the stock's going to be in 2 or 3 years. So if you're trading, you could kind of just throw the fundamentals out the window and just think about the technicals. Something overbought, oversold. If your style and if what fits you is more of a long term buy and hold approach, well, then you want to think about the fundamentals. But in a lot of ways, conceptually, they're the same thing, right? Traders look for stocks that are oversold because they think they're going to bounce back to the norm, to the median. Fundamental or value investors buy stocks that are undervalued because they think they're going to revert to the norm. A lot of trading strategies are based on the concept of reversion. All right, now here's what we got to watch over the next couple of days here. Financials really at a kind of a critical juncture here. I'm expecting a correction, like I said, nothing massive. You don't got to buy weapons and bottled water and move to the hills of Montana. Although, it might be fun thing to do, regardless of whether civilization is going to collapse. But yeah, so there's financials. Our tech sector, we're like in pretty overbought territory here. Next biggest sector is, I believe, consumer discretionary, but let's take a look at that. Yeah, so consumer discretionary is kind of stalling. All right, let's just take a look at. I saw an article today. I was like, oh, Bitcoin is crashing. So let me see what happened to Bitcoin today because I didn't get a chance to look at it. I mean, you know what? This just shows you why you shouldn't listen to the media. Bitcoin is crashing. I mean, that's preposterous. It's down, but I would hardly call a 2% correction a crash. Uh, well, anyway, I'm not going to go back and look for it, but I don't know. It freaks people out. I don't like these headlines. It's just clickbait. Now, a lot of times when something gets to a level that was support before, it becomes support again. This has to do with, and you can even see it here, support. This is because people experience seller's remorse. There are people that sell at the bottom and the thing takes off when they're done and they regret selling. So they tell themselves, if it ever gets back to my price and I could buy in this case, crypto back to the same price I sold it at, I'm going to. So if you have enough remorseful sellers here, placing buy orders here, the level that was support can become support again. It's a very common thing in markets. As a matter of fact, you could see it right here. One of the most interesting things about charts, I think, is that you see the same patterns in charts of different securities, whether it's a crypto, a commodity, stock, because charts are a graphical illustration of the psychology of the people that are doing the trading. And whether you trade crypto or whether you trade bonds or whatever currencies, people experience the same emotions. I mean, look down here, support at former support. All right, let's just take a look at Ethereum, and then I'm going to go chip some balls around my backyard here. Really nice up here in Connecticut, right? This time of year. Leaves are changing, blah, 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 blah. Okay, so here we go again. Where did we find support? The level that was support before, all right? And then resistance at former resistance levels. All right, well, that's it, everybody. Thank you so much for tuning in. And I guess I'll see you all soon. There's a lot going on in the markets these days.